Give us a sense of the large anchor countries in Asia: China, India, Indonesia, and perhaps Vietnam and the Philippines going forward. The countries with sizable populations where you have a lot of work to be done, building a lot more depth in the countries. Give us a sense of what you think you'll be doing in these places.
I think certainly you've identified a number of the marketplaces where there are enormous opportunity and where the penetration, the insurance penetration is very low. I think we see enormous opportunities. We see opportunities right across the field, whether it's in Indonesia, clearly the sheer size and scope there, both for traditional products and for the Sharia, but the Takaful products in Indonesia. In Vietnam, again, 85, 90 million population, significant opportunity to grow. We have a small business there. I think our aim is to become one of the market leaders there. When you look at China and India, clearly massive marketplaces. We have access to a third of China's GDP, a third of China's new life premium. We have a business that is growing, and I think we are very optimistic about both China itself and the opportunity that we have there. With India, again, very significant market in terms of size, has been a more challenged market in terms of the insurance business and the insurance industry. But over time, I think India will be an enormously successful and valuable marketplace.
But the regulators in each of these markets are putting increasing pressure and expecting you to be increasingly local. At the same time, there's competition. So, in that sense, the old AIA model of organic growth cannot possibly take its time in the way that it used to. You probably have shorter performance lead times today than you would have had in the last 20 years. Would M&A be a strategy? Are there non-organic ways in which you can build your depth in these markets?
The primary focus, and because of the vast under-penetration, because of the macro position, economic growth, increasing wealth, increasing earnings in the middle classes, the demographics, they're all very strong positive indicators to a life insurance business. So I think there's nothing in terms of the future that concerns us in terms of where we need to invest or where we need to be. And I think the focus remains primarily on organic. That's really where we think the opportunity is. Inorganic, we've said, will be tactical, will be opportunistic, but the 99% of our focus is on looking at what we can do to optimize the organic growth. We think there's a long way to go.
Well, that might render you second and not first in a number of these markets, or third. A number of these markets, Singapore, China, have their own local players who have greater size, greater penetration, and all that. Is there a need to leverage relationships, leverage partnerships, joint ventures outside of M&A to sort of just be there, if not the first, then the top two in each of these markets?
Well, I think it depends on what measure. I think we are much more focused on value than we are volume. So just going after being number one in the marketplace is not as significant as being the most profitable in the marketplace. That is where our shareholders would want us to be. So I think no. There is, at this point in time, as you've seen over the 90-year history, we are number one in 6 or 7 marketplaces across Asia. We're number one in terms of sum assured and in-force premium here in Singapore. Nothing has stopped us growing, and up until early next year we would have been a branch. And nothing is limiting us in our current structure. The opportunities remain irregardless of structure. That episode during the time when Prudential was trying to buy into AIG's Asian assets, was that something that you had conceived of when you were in Prudential and you saw being played out, or was that somewhat incongruent with what you thought Prudential should have been doing at that point in time? No, I think it's. I can talk about clearly what I did, and we certainly we looked at AIA as an asset when I was chief executive of Prudential. But I think always in these elements you've got to focus on ensuring you get the right price and the right value, and I think we had a clear view of that, and the progress, no further progress was made, but certainly we looked at it as an asset because it's a tremendous company.
But the motivation when you're looking at it that way was global dominance, being the largest, creating scale and all of that. How's that featuring in your mind today about the business that you are running? In a way, you're number 5, and you need to move up the scale even more today as a result.
Yeah, I think I mean, as of today, in terms of capitalization, I think we're the 6th biggest insurance company in the world. A year ago, we were really a long way away from that. So I think the progress made over the last year has been very significant. The players ahead of us, particularly the Chinese, are very significant and very material. We have great ambition, and we continue to look to move up that league table. But we want to ensure we do that thoughtfully, prudently, wisely, and profitably.
Yes, but what exactly do you need to do to move up that league table? What are the low-hanging fruits, in the next year or so, that will move you up in the league table?
I think the simple answer to that is we need to continue to deliver the results that warrant a movement up in price. I think it's a focus on execution, it's a focus on delivery, it's a focus on performance, and that's really where all the energy and the efforts of the AIA team are at.
From what you've seen as a leader in the insurance industry, when do the inorganic opportunities present themselves, and what does a insurance company need to be like at the management level, at the board level, to be able to take advantage of those opportunities when they come?
I think it is largely opportunistic. I think you cannot ever say that something will happen on this date. I think events, both macro and micro, happen all the time, and it's a dynamic situation. So I think what as a company I think is valuable to be is clearly prepared in many senses to be able to deal with opportunistic chances, and I think the best way to do that is clearly to be financially strong, well organised, and have the strength of the team. I think the financial strength of AIA is immense. We are one of the strongest and best capitalised insurance companies in the world. The quality, I think, of the team and the depth of the team is very strong, and I think we are focusing, as I said, on optimisation performance now, rather than focusing on anything that involves inorganic in the future.
Well, what about non-life? Is that a missing component in your group that you think you need to build some scale on?
We have a number of non-life licenses, but we think the greatest opportunity at this time and where we will put all our energies and efforts is on the life business, the life and protection businesses, and that's really where our focus is. So I think it's we may look at it again over time, but at this point in time our focus is very much on building our life savings and protection business.
Looking back on the listing in Asia, do you think that large global financial conglomerates with significant Asian footprints at the time of the crisis should have considered some form of listing in Asia to sort of ring fence or decouple the energy of the business in the different parts of the world that they have? Do you think that other financial conglomerates could have considered that as an option, or was that an option that was unique to AIA?
Yeah, I think we are an Asian business, so I think we are 100% Asia. I think if you look at AIA, what is unique is we are 100% Asia, 100% retail, 100% financial services, and the ownership structure means that we have 100% ownership of 14 out of our 15 businesses. That is a completely unique position. If you want to play a pure financial play on the Asian consumer, then AIA is the only company that you can buy. So that's a unique position.
Yeah, but what had to be done to sell the idea to the AIG group? What were the conversations at the board level to make that decision to be listed in Asia?
I think that was a decision taken before I came on board. I think clearly the group had commitments to the U.S. Treasury, to the U.S. Fed, and clearly part of the paying back of the debt that was owed was the proceeds from the IPO.
Outside of the insurance industry, you did have short stints as a director at HBOS and Prudential, where you were before. Owned Egg as a banking channel in that sense. What is your thinking today on insurance companies owning banks or owning other financial intermediaries in order to grow?
Well, I think you say each company must go down its own path. I think the banking businesses and the insurance businesses are very different businesses, and I think it's important. They're clearly in the financial services space, but as businesses, they are very different. One is much more shorter term, one is much longer term. One is structurally more liquid than the other, and I think it's important always just to ensure that there is clarity. But I think there are many companies that will be successful in insurance companies buying banks and banks buying insurance companies. There's no right or wrong model. I think what will clearly be the focus of boards and companies going forward are the capital regimes that are needed and any potential ring fencing. So all of these, I think, will be the areas of focus, but there's no right or wrong way of doing it.
But is it still an attractive proposition because of all these issues that are increasingly complicated in that sense? Are banks still of interest to you?
No, I think for AIA, is there any interest in acquiring a bank? The answer is no. I think there never has been, and I think that this is not something on our radar screens. I think we have such an opportunity within the life protection saving space that we are in, that is where we will put all the energy.
Final question. In all the conversations that you have with your management team, what are the 2 or 3 biggest items on your in your mind that you keep talking about and spending most time on, and you think that there's a lot of work to be done?
Well, I think that there's always work to be done. I think there's always more that we can do, and we can do it significantly better. I think what dominates a lot of our time is people, to ensure that we have the right people, to ensure that we are motivating people, to ensure that we are retaining people, and to ensure that we provide people with a great future. And that is really sort of where the majority of our time is spent.
Mark Tucker, thank you very much for speaking to us today.
Pleasure. See you.